Hey there, how are you doing? Welcome to the channel. It's been a little while, a couple weeks. I was off visiting family and, across the country, so haven't made a video in a while. So today, I just want to make a video on the stock market. Very kind of interesting today. We had, pretty decent sell-off today in the stock market. We're down like 1.6% on the S&P 500. So, if we look at this, we just try, to look at. So here's today's bar. So it's a pretty big down day. A couple things to note that our 50-day moving average here in this pink kind of color, we kind of bounced off it. And, we'll see if that's going to be an area where it bounces off and starts to work its way back up, as it's done several other times. Here we've had, bouncing off it many times. Here we've had more significant, spending a couple days fighting at the 50-day moving average. So we'll kind of see. I think if you, you kind of look at it, since the correction of end of last year in 2020, we've been straight up, just totally going up. So we'll see if this is going to break it. I think right now that this correction, I mean, if you look at it, once again, it's not that much. You're talking about not even 2% today on the S&P 500, call another 2% the day before, another. So maybe we're 5% off the whole all-time high at this point. So that's not really that much of a biggie at this point. Let's look at this. Let's look at the Dow Jones Industrial Average here and just kind of take a look at this guy here on annotations, clear all drawings. Okay, good. And, we see that it's interesting. The Dow Jones is weaker, down 2%. So it was weaker than the wider S&P 500. You can see here that there's a little bit less of a trend here. Okay, so this is if we look here, it's, maybe at a little more risk. If, the other chart we had was pretty much, S&P was doing this type of thing. So this was the S&P. So S&P was just kind of going up against the trend line. Now here it's similar. It is very similar, except what you have here is, look at this. We really haven't made any forward progress since May. So May, June, we're into July now. We really haven't made any forward progress. So, that is something that's a little different here. And, we had a 2% day before, maybe 1.5% the other day. So once again, not a big overall day, but it's interesting to note that, you're kind of in this range now. And, we'll see the big support. Now it's already blown through the 50-day, but kind of keeping in mind the 50-day is flattened out. So we're in a consolidation kind of area here. Now that doesn't mean it's going to crash, but consolidation area means it may, go this way for a while, or it may make a run. So obviously, the key point here is somewhere in this 33,250, where this point is, is it going to hold that support or not? If it breaks that, then it starts, heading down to older points in time like that. So yeah, kind of interesting that, the Dow Jones actually performed worse. And let's look at the NASDAQ. So just look at the NASDAQ market. See, NASDAQ market actually performed better than the S&P 500. So it's only down 1%, whereas the S&P was like 1.6% and the Dow Jones was like down 2%. So you can kind of see that this kind of like held up better. It held up better. But once again, we kind of don't have as much of a trend here. You have these, coming up, but, it had a more of a correction here. You look at a W here, it kind of broke out a little bit, but didn't really make much progress. It's kind of flattening in this range. And then finally over here, it did break out, but it, got a little higher. So, I mean, it's possible that, the cues are setting up to actually kind of move into a more stable uptrend, possibly. Who knows? We don't know. We can't predict it, but it held up a little better. I mean, that's all we can say at this point. So the tech didn't get beat up as much. So there's something weird, something moving around in there. So let's look at the 10-year Treasury today. And, there's a lot of talk. So I guess a couple things. So here I'm looking at the yield, 10-year Treasury yield, right? And we see that it's really dropped off today. Now, there's a couple things about this. If you look at and then I want to look at the big chart. So here's the weekly chart. So we have several years worth of data, 2 years pretty much worth of data. If you look at this thing, yeah, we're coming down, and but there's something to keep in mind with this. There's sort of this talk of inflation and concerns about inflation. And one of the indicators of that is, rising interest rates on the 10-year, because if inflation is going to be higher, then generally on the bond end, the bonds are worth less. So you're going to pay less for them. You pay less for them, the interest rates go up, right? That's how it works. But what we have here is we have this going off. So now, some people would look at this and say, hey, look at it's actually kind of falling off on a weekly basis. I'm on a weekly chart. It's kind of precipitously dropping off. But the thing is, does that mean, is that like a deflationary sign? Well, not necessarily. It can be, but, keep in mind that what's happening is, we're getting like pullbacks in the stock market. So for certainly, this week, and well, it's kind of interesting. The market was holding up last week. It did get some pullbacks, but then the week before. So, it's hard to say. It could be an indication that, they're worrying less about inflation. But the other thing is, it could just be money being pulled out of the stock market. And, this pulling out of money could have started in the past few weeks, and now it's showing up in the indices. It doesn't have to be an immediate thing. So, that's one thing to keep in mind. So if you were like on the train where like you're concerned about inflation and you're seeing this drop and you're like, hey, there's no inflation problem anymore, that wouldn't necessarily be the conclusion that you can draw. You have to draw that there's some pressure in the market right now, and the pressure in the market is definitely like typically, like if you're one of these big funds or whatever, you can't just go to cash. You often can't go to cash. And so you got to go somewhere. So you go to a bond fund or something like that. And so it could just be, and so that once again, not financial advice, and I don't have all the answers, but it could just very well be that it's just, hey, money pulling out of the market, looking for a safer place to go. And of course, this has it feeds on itself. The yield dropping is, equivalent to the price going up. The yield is dropping because the price of those bonds are going up. So if you're losing money in the Dow Jones Industrial, you lost 2% today, maybe you're making some money in the bonds. So that's just one thing to keep in mind. So everything is always confusing. It's not always clear. And so when you look at this and say, oh, there's not an inflation problem, well, it doesn't really mean that. All right. It just means that, hey, maybe money, it could mean, and that's the way I would describe it. It could mean that money's running from the stocks, trying to find a place to go. So now if we look at the dollar, and I'm just going to use UUP, the ETF that measures, bullish dollar. This is quite a chart here. It's very interesting because you have a large bottom here in this dollar. You have a W here, and this is on the weekly chart. So this thing, look, this is like a half year. This period of time, this period of time is like a half year, 6-7 months base. So this is a very, big base, significant base. The key is going to be in this range, right, at the 25, and we're pushing up against 25 again, $25 on the UUP or whatever the equivalent is on the Dixie, the dollar index. So it's, it's kind of interesting. So if this dollar does, pull up and break out of here, there's potential for a run, but it's always capped by this, and then it's most likely capped by this. Your dollar isn't going to put a new, that's the thing with these, like, it could, but it's very unlikely that the dollar is going to put in a move where like, oh, it's going to suddenly go high like Amazon stock. It's very unlikely that that's the case. But if it breaks out of here, you got a real good shot at it getting up into the, the resistance at the other highs. So that would be up, in the 28 range, in this range. So yeah, that's kind of interesting. So that kind of should be putting some pressure, I would think, on gold and stuff. So let's kind of take a look at that and see. So yeah, so I don't have a good answer for hedging, like how I would want to hedge at this point to cover in case this market decline becomes much worse, but I don't really know. The gold is just, whatever. It made a move up and it's just kind of going down for half year and then pulling it. So it's just kind of a, who knows? I mean, we could try to pretend to draw some patterns on it and see what we get. I mean, usually these patterns are, you draw a pattern, it's pretty much worthless. That's my view. But here's the pattern that technical guys might come up with. They might be like, oh, look at this. Look at where it went up there. Look at where it went up here. And you just kind of cut off that part of the candle. The reason you cut that off because it's convenient. That's what you do. Yeah, it's kind of, it's kind of convenient, And so it's a weekly chart, a big chart. And look at this. Now that's like, that has the look of what? What does that look like? That looks like an inverse head and shoulders. You have come over here, you have this shoulder, you have the head, and then you have another shoulder. So you have this is the neckline here. And now the question is, now it's really weak in here. The GLD is really weak. You're not getting strong days in this period of time. So it's not really looking very good. It's really not looking very good that it's going to make a run. But you could look at it and say, hey, there might be an inverse head and shoulders. Well, okay, it could be, but it would have to put some very strong days in here. And right now it's not. I mean, it has to make a run and have to break out significantly of this 177 to 180 range, even 182. It's really got to get above that and that for it to make a break, but it's kind of interesting patterns. So with these things, you take them with a grain of salt. This, if you were looking at this saying it's a inverse head and shoulders, which would be the converse of a head and shoulders, which would be bearish, inverse would be bullish. It's probably not the case. It's like, it's probably not the case. Our minds are really good at finding patterns, even when they don't exist. And that's, of course, one of these fatal flaws that in humanity we don't really recognize. Now let's look at this guy. I had some ARK and I had sold it, ARK, and I had traded it in here, and then I went on vacation, so I got rid of it. So, you have the situation like here, it had come down, downtrend, broken the downtrend line. But, what's interesting here, if you look at it, you still have a setup here. This, like a longer term setup, you made this run out here, and then you got capped here at 132. But what's interesting, you kind of broke out a little bit of here. Now, you didn't go very far, right? But you kind of put into that area. And now you came way off. And then what's interesting today, look at this little bar today. That's a very strong bar in ARK. I mean, it's not great. The volume was up on it, and it's a good, strong positive bar. It's a probably bullish engulfing. No, half cover. I'm not sure what the pattern is, but I mean, it's pretty good. In and of itself, it means nothing. But it's possible, like if this thing finds a home here, look how that 50, see that red line? Look how that 50 is turning around. See how that's turning around? So let's look at this on the bigger picture, because this, what's interesting here is, because look, I was looking at the Qs and I'm like, well, hey, the Qs, what's going on with the Qs? They didn't go down as much. Well, maybe this is part of the reason, stuff like this. Now, I don't know for sure. This may not even be in that. But now looking at this, like on the weekly, so you had a big move, and then, you can look at this and just sort of, if I'm looking at this ARK and just putting the fundamentals aside for now, it's really clear you have resistance at this 130, right? But the thing is this a topping pattern? Well, not really. I mean, it doesn't seem to be a topping, but definitely, it peaked out, and now it's consolidating. It's consolidating down here, and it's kind of like this widened the range here, this down, and now we're in that range. Now, if at some point this thing, if at some point this thing wants to turn around, I mean, it's got potential for building a base. It's a base, and then if it can build that base, see what happens from there. And that's never a prediction with this stuff. It's just, and silver getting beat up as we'd expect, given the dollar doing its thing. And then just putting the SPY in terms of it, very little today, very little. So we'll see if we're in a correction or whatever's going to happen, but not really much going on. Tesla, Tesla was one of these guys that had the downtrend, but really a descending triangle. But this one's weaker than ARK. So what I mean on this guy here is like if I took and I say, hey, you had this kind of downtrend here, right? And then you look and you say, well, you kind of have this support. So it's a descending triangle, right? So you're finding this low, you're getting lower highs and it's compressing down. Now it broke out just like RK and some of the other ones, but comparing to RK made a nice move out. This one really got clipped. It really got clipped in this one's 700 range. So, you know, in terms of strength, it's actually weaker. It's weaker than RK. And you kind of look at relative to the chart. I mean, you look at percentage wise as well, but you kind of look relative to the chart. Like, did it make much progress coming out and breaking the downtrend line? That's kind of where I would look at it to just try to see, you know, and there it's kind of weak. So not really positive on that. You know, UNG, this was this natural gas, and this is ETF natural gas. So, you know, as we had before, and I think I had bought some of this, and I sold it because I was going to be away busy doing other stuff. So I wasn't going to be just sitting on this crap. But, you know, once again, you have, let's do this. Yeah, once again, you have, okay, hello. Okay, let's try to do this. Okay. There it goes. Yeah, once again, you have a, you know, big downtrend. UNG, like if you go and zoom this chart out, like, yeah, let's go to this for a minute. Max week. The UNG, like back in the day, back in 09 and stuff, we had all this like speculation in natural gas, and it was going crazy, but it's just been on a downtrend ever since. It's just gotten the crap kicked out of it. So it's important to keep that in mind. You know, this is not a long-term. And with UNG, I suspect that there's a significant component of negative amortization, or what they would call it, a carry cost to this. And I haven't looked it up, but when you see something like that, there's probably a carry cost to it, meaning that if the price of natural gas had held itself steady at whatever, some price, then even just holding it, you probably would have like lost money because of the cost of the fund or whatever. And so that's my guess, but I can't say for sure. But now looking, and that's why like in stuff like this, UNG, these things, you know, these kind of ETFs, you know, look at trades. That's what you look into, trade, because, you know, just sitting on it is very problematic because if it has a high carrying cost, et cetera, it's a pain. Watch The Big Short about the carrying cost. I mean, it's funny. I never really understood that till I watched that movie, and I'm like, oh, I really get it now. I understand, like, you know, you have to be able to support that position, and it costs you money to hold the position. Yeah, it's like options as well. Okay, but back to UNG here. So yeah, so if we look at this guy, you know, we have, you know, downtrend, but, you know, you see what you have here is big base, you know, really potential big base. But the problem with UNG as well is we've had big bases before and they've gone nowhere. But see, it did break out above this 1150 range right here. See that? See W, boop, break out of there. And it did. And it's still actually working its way up. And, you know, we certainly have more resistance. We're right at more resistance, 13, and there's more resistance here. But then, you know, then you're going to get yourself clear to over here. See this dip here? You kind of get clear to here. So this is an interesting one because, you know, natural gas, you know, whatever, if it's going to run, if it technically is like, okay, then, you know, it's, I'll look at it for a trade. I don't care. I'm not married to anything or not with respect to that. I mean, the thing here, looking at now, going to the daily chart, and you can see kind of volatile, and I have to mark where I close it. I close it up somewhere in here, somewhere in this consolidation. But, you know, here's what's the next setup as well. If it breaks out at 1325, maybe it would run there, you know, so that might be the place to do something with that. And then I had some speculative on the, you know, the workhorse got devastated. Looks like it kind of got beat up. So all these, you know, I wonder if the Wall Street Bets thing is over. You know, you have BlackBerry, like, let's see, GME, the poster child for Wall Street Bets is, you know, it's amazing how it's still hanging on as much as it is, given the fact that it's probably really worth, you know, this is $25 here, whatever, $10. It's probably really a $10 stock, and it's still hanging at 175. Rather amazing. And AMC, you know, this one as well, even though it's had huge losses. I mean, it peaked at like 75 and it's been cut in half at 32. So significant losses. But on the other hand, it's, you know, holding at 30 when you know, it was down in $2, $5 range. So, you know, I don't know. Things are coming back, so maybe people will be coming back to the theaters. I don't know. I know that, like, I traveled on airplanes, and I can tell you at least the planes were packed. They were just stuffed to the gunnels, just stuffed. And so, are the airlines making money? I don't know. I mean, they're charging you for everything. You know, they're charging you for everything. They're packing you in, so they have the potential, I would say, to start making some money. That's what I would say with like the airlines. Whether they are, I flew American and Delta, and they're just packed, and the airports were packed. Everything's just packed. So if you haven't been back to flying domestically in the U.S., anyways, as far as my experience was, just packed. So things are really back. Now, does that mean that these companies are good buys, are financially viable, or, you know, it doesn't mean any of that. It's just anecdotal that, you know, hey, you know, there's a lot of activity right now. At least that was my impression. It was only over 2 weekends that I flew, so who knows. So I think that's kind of it for this update. You know, another situation where we have, you know, depends where you're at. You know, some people are like, oh, it's really bad. Other people are, it's not so bad. It just depends what you're in, what kind of things you're in, and stuff like that. So I think the big question, you know, whether the market really was correcting because they're worried about the Delta variant and all that stuff of the cough, you know, I don't know. I think I think what I would say is that, you know, it's very possible they'll mismanagement. I mean, they've mismanaged everything from my perspective, so it wouldn't surprise me that they mismanage it. How would they mismanage it? I think if they go into lockdowns and stuff like that, then they're probably mismanaging it because, you know, as it stands right now, the Delta is sort of known, the research, at least I've read, is that, yeah, it's more infectious. And so, of course, that's a concern. But the other side of the coin is that it's less, you know, it's less deadly. Now, whether that continues to hold, I don't know. So to like reclose things down and re-put mask mandates on due to that is, you know, kind of a challenge. But I will say that, you know, obviously, you know, as I think the guy from Peak Prosperity would say back early in this crisis, you know, it was like case, cluster, boom, you know, so I get where the concern is, whether this will be, I mean, right now, if you look at that kind of stuff, like if you go to Worldometer, but let's look at the overall for the US here, total cases, daily new cases. So that's one to look at, daily new cases. So you can see the rise, you know, daily new cases ticking up here. Let's see if I can zoom in a little bit. Got it. Okay. Yeah, so daily new cases, you can see that, you know, it's ticking up, but it's still not a lot. It's like, so as of this report, you're talking about 32,000 cases, new cases, okay. Active cases, but here's total deaths, but here's the one also that you want to look at, daily deaths. Now, there's always a lag, for sure, there's a lag, but you can see, like, just look at it like you know, a fifth grader or a sixth grader. If you look at this chart, what would you see? Here's your cases. You look at it, you see, yeah, there's an uptick. You can see that, you know, it was declining, kind of ticked up a little bit and then went down. So it's kind of interesting. Back here, you had an uptick, but it didn't really go very far. And then over here, it's ticking up again. Will it go far? You know, I don't know. But you can see the uptick there. But what you don't see at this point is the deaths. You know, it's still declining. It might be flattening a little, but it's really declining. So that's kind of, you know, we'll see. Obviously, the deaths lag 2 to 3 weeks. So, you know, we'll kind of see if that happens. But I think, you know, if they go in that direction to shut things down again, I don't think they can. I just don't really think they can. I mean, I think they would just do like, hey, wear a mask again and all this stuff. They would do something like that, would be my guess. Because it just, you know, at this point doesn't, what good is it going to do? So that's it for this one. I just suspect that, you know, our market is just a little overdone.